Good NFP day to everyone. TGIF at the same time. How's everyone doing today? I think we should be looking for a weak number. That's what the market's expecting. How can't it? So hope everyone had a good week. I know we've provided some decent ideas in face here, and the team's done very well this week in the market on pattern and play. I also want to talk about a small victory lap, not a big one, like a quarter mile. When yesterday I was building the case looking at the weekly chart and said we could end up with an outside week. We had just started to turn positive on the week. Then I put a phone call into our president to him announce he called me and said, Dale, it's really not about Venezuela. I'm going to say that the Saudis and Russians are going to cut a deal. During that time frame when crude was rallying, Ben Maldonado right here in the room said $27 is a target. How cool is it that pros like Ben hang out with us during the day? So, it's not just people beginning or wanting to learn, it's veterans coming in here and intelligence gathering, like I talk about, when I interview guys like Ben. No interview today. So now we're challenging 27. Heck of a week. I don't know. A lot of people are saying, don't believe it. It's wave 4. We're going to 10. I don't know. I can make a case for, gosh, all the way back to $40 oil. We'll see. Anyway, when you have profits, grab them, but always leave a small piece on because the magnitude of the moves, and you turn your head and then crude's $4 higher like yesterday, and then it's hard to chase. So a couple of things I'm looking at today, and also yesterday I said I think there's going to be a continuation move in the S&Ps. They continue to hold this 24 level. We'll see what happens with non-farm payroll. We basically have an inside week, about unchanged on the week, not a great candle. But again, if we can make a move with all the bad news that we have back over this 640 level, here are your next fib levels to consider. Okay, and a lot of people are going to be looking at this as a head and shoulders bottom that can measure up here. We'll see what happens. Something interesting. We all know Euro Pound up until a month ago was on a tear, right? So interesting area it's at now. 61.8. So look at this daily chart at 61.8 on Euro Pound. And then look at the Euro, which has already taken out 61.8. I have a hard time wanting to be bearish Euro here. In fact, today's one of those days where even though both Euro and cable are down, cable's down more, Euro's down less. But the point being, Euro Pound, kind of tells you what could happen in the market, and the fact that it's holding the 61.8 level is interesting. It's still a lousy week, and maybe we could push even a little further, towards 86.80. That was a big number coming out of here. This is where I was trying to top pick it, and it just, blew me out. So this could be an area to buy it. And, let's see what you guys, wow factor possible. Okay. What kind of high is this in Euro Pound? Come on, you guys been hanging out with me for 3 years here, or maybe longer. Here's the high. Confirmed high. Okay. What's the implication of a confirmed high? What does a real simple implicator, what's the message? Of course, there are always exceptions. I'm good. How are you, Ingmar? No. Anyone know the implication of a confirmed high or low? that most likely it's not the high, it's a high. That's right. Okay, so this is something I'm stalking. Maybe I'll try something after the Fed. I may get my head handed to me, but I'm just put a piece on in the Dixie here. You know, even the Dixie isn't as strong as the euro is weak, and kind of look like we're getting some type of little zigzag here. Is way above the moving averages, but earlier in the week, Blake talked about it could squeeze up to 101. Well, we got pretty close, and this is pretty important resistance up here at 101. We'll see what happens, but this could be the kind of day to fade dollar strength. And I'm only saying that because the euro isn't leading the way down. And you can see how there's a little bit of a heartbeat in euro pound. All right, so this one, I had a successful scalp, but it's, you know, holding real well and pressing the 1620 level. This too can still be a short. All right, I mean, you have to risk the highs, but now I think we're 78.6 back. This was, you know, about a $180 decline. So 78.6 would be about $60 back, and that's about where we're at, 620, 624. We'll see how that reacts today. Silver not as strong as it was yesterday. Gold silver ratio, and then I'll turn it over. Oh, just one other thing I want to say. It, you know, most people would say, and I've been talking about this, that everyone I talk to says, yeah, 10 years going to zero. Well, that might be true, but we're talking about, it looks like it's starting to, you know, carve out a nice higher low, and no one thinks we could see a 2% 10-year again. So that's something to keep an eye in. TLT is trying, but as you can see, it's, you know, so far rejected from 78.6 back, and I don't know, why can't we have another pullback in bonds, especially if S&Ps can have a breakout over that resistance level. You see 1.5%. Okay, thank you for sharing that. And I think that's about all I'm going to cover here today. So I'll hand it over to Blake and see what he's thinking pre-MFP. Okay, buddy. How about you?
By the way, today is Friday. I didn't.
Oh,
yeah.
I did say it was Friday, didn't I? TGIF?
No, I'm just saying it's all the days kind of blurring together. It's like, oh, yeah, today is Friday. Maybe for you, it may not be so different. For me, just because the kids are at home, and it's like you lose track of days, and
yeah.
You know. Anyway, today is non-farm payroll day, and I noticed you were looking at the euro pound, and for those not aware, there's a pattern in play in the euro pound from yesterday.
Cool.
Because of exactly what you're pointing out. This is now. I want to talk a little bit about this though. You know, a lot of us were buying it. Excuse me. A lot of us were buying it down here because of the 200-day moving average breakout from the March highs. It's the 618 retracement.
Yeah, a lot of stuff there.
Yeah. So, and we got these wedges that are,
right.
There's a little descending wedge here, and then
nice.
I think a break above 88, probably like 88.50, 88.20 would, take us back up towards 89. This is where the real decision would be made. But one of my colleagues in Connecticut, he was pointing out that seasonality for the month of April is usually pretty bearish for the euro pound. I went back and I looked at April moves, and he's correct. I mean, you look at if you go to the daily chart, you just take a look at April right here, April last year, 2018. Here's April. There's April 2017. Here's April, right?
Right.
2016. Here's April. So, April is not a bullish month. And that's just going back the last 4 years without, going through the process of all of the
You
months
could
of
always
April.
find a reason not to do a trade. Have you noticed that, Blake?
You can, and you know what? I'm not a big seasonality guy. And you know, after 4 years in the month of April, you know, is this going to be the fifth year of another down month in April? I think you kind of throw seasonality out of the window because of the environment we're in. You know what I mean? Like, this is not going to be your normal
No.
environment, no matter what you're dealing with.
I
So,
wonder what it did 100 years ago. Oh, there was no
there you
euro.
go. Yeah, yeah.
Yeah,
I
so
mean,
we don't have a 100-year precedent on it. Okay.
yeah, right. Or, you know, looking
The
at the euro.
last pandemic,
Yeah,
how did it
let's
trade?
look at the euro sterling from 100 years ago during the Spanish flu. You know,
Yeah.
I mean, but in all actuality, you know, looking at seasonality, the seasonality picture is not so, for me, it's not so important based on the world we're living in at this moment. So I just want to point that out, you know, as well. It's something to note, but it's not going to dissuade me from taking my position, which I am long the euro sterling right now. So, and I'm not, you know, I'm not dissuaded by that for any reason whatsoever. One thing let's talk a little bit about the dollar, because today is non-farm payroll. We are expecting, well, if you look at here, this is Bloomberg, so you guys can see, move that open a little bit. So you can see the change in non-farm payrolls. Market's looking for minus 100,000 jobs, right? So, and you're probably thinking, wow, that's not very much. This is pre the jobless claim. So whatever number we get, if it's then that's the thing you got to think about. There's a few things you have to think about regarding the dollar. All right, the number might come in better than expected. And if it does, and the dollar rallies, do you sell into that rally knowing that, you know, yeah, that was, you know, that was before this big jobs loss? Or, you know, if it's better, you know, you're long the dollar. So selling the dollar strength, that would be the initial thought. If it's a weaker number, then you're like, okay, maybe I'm just going to short the dollar because we were already starting to show weakness from the jobs report. Then it's, you know, it's going to just get worse. Now, the flip side to that, and this is the hard part when you're dealing with the dollar, is you don't know if the dollar is going to have the Mr. Hyde or Jekyll face on, meaning that if we see the market, you know, like let's say we see a little bit of risk off, is the dollar going to strengthen because, you know, there is still massive dollar demand. I was talking with another one of my colleagues yesterday, who's out of Chicago, and he's really just an extremely brilliant guy. And he was like, you know, I'm looking for reasons to sell the dollar because the Fed and what they've done, and all the liquidity they're putting out, but I don't know when the right time is. And that's the same quagmire I believe we all are in, and myself included. I want to short dollars, but honestly, because of the environment we're in, I don't know if shorting the dollar here is the right play. You know, I'm just drawing this out for, you know, whether it's here or here, or I don't know if shorting the dollar up here is the right play. Right. So I'm myself, I'm in the same camp. It's like, I really want to be short dollars, but it is this the right time to be short dollars? And the answer to that question is, I don't necessarily know. Well, I definitely don't know, but the reason why I'm saying that is because if, let's say, the S&P drops over the course of the next couple of weeks to 2,200, I think the dollar is still going to be in demand. So, regardless of what the Fed has done, the Fed has eased. Without the Fed expanding its balance sheet, and without us doing all the stimulus and everything we're adding to the economy, if the Fed wasn't as active with their repo facilities and offering, open-ended lending from central banks globally, the dollar index would probably be right now, 105, 110. It's only down where it's at. It's only where it's at based on the Fed actions as of right now. Without the Fed, we would be a lot higher in the dollar index. There would be a bigger rush to be buying dollars. So it's a very, very tricky day today with non-farm payroll. Let me just share with you like one idea that I have, which isn't a great idea, but it's an idea. Okay. I look at the dollar yen, and looking at the dollar yen, let me take you to an intraday chart. I'm actually more bullish yen than I am, I'm more willing to play the bullish yen card now. Meaning that if stocks go down being long yen, I don't mind that trade. Okay. What I think, because we had this, you can see this brief new low, right? Right there. And then, now we're reversing. I think playing the dollar on the short side makes sense to me in the dollar yen, but not where we're currently at, but up here. So if the dollar spikes because we have good news, I'm willing to step in and short the dollar yen, maybe at like the 109.25. Now, the other thing that you might be asking yourself is, in this environment, well, Blake, do you want to, get short the dollar yen and stay short the dollar yen? And the answer to that question is no, I don't. If I could make a quick 30 pips today, like doing this, that would be, good for me. And I could say, all right, I'll call it a day on Friday. And you'll also notice that this is a 50% retracement. So if we do reach 109.25, I think I'd be willing to sell it up there. Right. That, personally, that's a trade that I'd be willing to take is short dollar yen up there. Now, we're not guaranteed to get good numbers by any stretch of the means, but if we do get a decent number, I want to sell into strength. But like I said, I don't want to be around. I don't want to be around for any extended period of time. I as far as the dollar goes, I just want to trade it on the long side, trade on the short side, be done with it. Because as I've explained to you guys all week, especially for those of you that have been listening to the daily roundup webinars, which by the way, the daily roundup webinars are for our premium members only. If you're part of ForexAnalytix, it is now
for our members only, premium and light.
Oh, I'm sorry, for our clients only, not premium.
Yes.
It's for any ForexAnalytix subscriber, right?
Yes.
Okay, so it doesn't matter if you're premium or on the light plan, but what I've been, thank you, Steve, for the clarification. What I've been telling everybody this week is I don't know how to play the dollar right now. I just don't. So my dollar exposure will be very limited, and I'll be in and out. I'm not going to. I can't establish put a foothold in being aggressively long or aggressively short the dollar right now, because I just don't know how to play it. I don't know what the right play is, and it's okay. And I try to explain to people that it's okay not knowing. I have other ideas that I'm playing. And if obviously for those of you that are in the chat room, you guys know exactly how I'm playing the FX market right now. Because, we talk about it. But as far as the dollar goes, yeah, I don't know what to do, and I look at the euro dollar, and I've tried to play this thing on the long side. I do have a little bit of euro dollar exposure, a lot higher, but it's so small, and it's not, anything that I'm, really even paying attention to. But, I'm playing it near the 618, and it's like my average is like right here. And it's like, I I probably won't have it over the weekend. I just don't. But my more aggressive positions are now in crosses, because that's where I can find the opportunities that makes most sense to me. So let's take a really quick look at the S&P really fast, and let me just make sure I'm clear on a couple of things. While the S&P is below this 38% retracement, this 2644 level, it's hard for me to be bullish. But going into this weekend, I do think we are starting to run the risk of more positive news flow over the weekend. Whether, we peak in, new cases in Italy, or new deaths in Italy, or France, or New York. And let me also state that I think that that numbers are going to continue to go up, not necessarily in New York, but in other places like Florida, Louisiana, California, Arizona. I think that that's where I live. I believe that the numbers are going to get precipitously worse in other parts of the U.S. But if New York, the reason why everybody's watching New York predominantly is because it's our most congested area, which with the most infections. If it can look like we are peaking out, or at least starting to level off, or hitting what Governor Cuomo calls the apex, if it looks like we're doing that, then that gives us hope that the rest of the country is probably 30 days behind New York City.
I'm looking for a 3 drive before the apex.
I guess
now even
I'm only
Cuomo
hoping we have.
was a
I only hope we have
technician
one drive, Dale. I mean,
okay, I know what you mean.
for that's it.
I hope the confirmed high is the top.
Yeah, exactly. So
I know what you mean, buddy.
Yeah, but the thing is like I said, I think that we are starting to run the risk at where we're at in time, that we can start to see some more. And positive news is not, take that with a grain of salt. But I think that we are going to start running the risk that the news is people become more optimistic. So that's, I think, something that we've got to think about. And so, when you're trading the S&P, it's like every weekend for the last 4 weeks, it's like, yeah, if you're short into the weekend, it made sense, and because on Monday things were down, because things are just not getting better. And I'd like to believe that things are going to be getting better sometime soon. I may be wrong that this is the right week, but I'm just saying that I think we are running those risks now. Now, as far as the S&P goes, one of the things that I think we probably should pay attention to here, if we take the low, right, to the high, that's from the recent rally. And let me zoom in a little bit here. Okay. So the 38% retracement is holding. The 50% retracement comes in roughly around 2400, 2408 here. And you can see all those spike lows. Bulls do not want to see us drop below 2400 now. Because the reason why I say that is because if we drop below 2400 like this, now we're creating lower lows again. All right. That would suggest to me that we're probably going to revisit these lows. It can happen, and it may happen, and I do believe that even if the data about the virus improves in the following weeks, the economy itself is not necessarily going to improve, but I think sentiment will improve a little bit. So anyway, that's why I'm like, I want you to make sure that you're not, like aggressively bullish down here, but that at the same time be very cognizant of, the support down here at 2400 is got to hold. Bulls have to hold the line there. They really do. All right. So anyway, I'm just, I just wanted to point out a couple of things ahead of non-farm payroll. I know the jobs report, like I said, I'm not going to be very aggressive with the dollar here. I don't have much of a I don't have a conviction on how I want to play the dollar, because I just don't know how the dollar is going to respond following a number. Even if it's a good number, I don't know if the dollar is going to get sold because everybody thinks that, oh, it's a good number, so let's buy it. No, because bad data is coming. Or if it is just a bad number, if you short the dollar, the risk is that there's so much dollar demand that it goes right back up in your face. So I think the dollar is not a safe, for me, in my own head, it's not a safe play, long or short. I don't have a lot of conviction. It's not saying and that's not to say you can't make money trading the dollar today. I'm just saying that I have very little conviction on either direction. So with that being said, and I'm going to pass it over to my colleagues here, but I want to say, if you haven't tried ForexAnalytix and you're not in the chat rooms with us, join. It's $1 for 10 days. Try it out. And then when you do so, make sure you visit Forest Park FX, because they're going to be the firm that can help you find the right broker based on your needs. Okay. All right. So Steve, Stelios, good morning, gentlemen.
Good morning.
How are you guys doing? Did you guys know it was Friday? I didn't know it was Friday. I had no idea. I got up this morning. I'm like, oh, happy Tuesday. No, I'm joking. But I'm really actually excited about Friday being over and turning off my computer and drinking a beer and not worrying about anything for a couple of days.
Yes, absolutely.
I'm
with you on that.
Other than washing my hands. And
maybe we should Skype and have a beer together.
You know what? That's probably not a bad idea. We might have a team Zoom meeting. Everybody else is doing it. Let's do it. Let's do it as well. All right, guys. Well,
okay.
I want to say, have a great weekend. There is no daily roundup today for those of you that listen, and that's Monday through Thursday. So I will not see you till the week ahead video. For those of you that are, listening in live, and for those of you in the chat rooms, I'll see you guys in there in a few minutes. All right. Thanks, everybody.
All right, have a great weekend.
You do
despite everything, man.
Please, yes, and please be safe. Wash your hands. Keep your distance. And I got to mention one thing, guys. If you haven't seen what my wife is doing with this 13-year-old kid, is absolutely. I've listened to this kid on conference calls. You would think he was 30 years old. He's like, school's my number one priority, but I'm out of class at noon. I can do this conference call here, and then I got to meet with this executive here at 3:00. This kid is phenomenal, and he's organizing all of these 3D printers, and they're all getting shipped from our house. So, any donations are great, but if you have a 3D printer and you want to get the files downloaded so you can make your own to give to people that you need, make sure you let us know. Let my wife know.
Yeah,
right?
You mean masks?
Masks. And they do masks. They do shields and masks, and
wow.
They're all 3D printed. They're making them for all the hospital workers and
cool.
first responders, basically.
I didn't actually see it, Blake. I do have a 3D printer, by the way.
Well, you didn't see my tweets yesterday? What's wrong with you? Go check them out. All right.
Too much work, unfortunately.
Bye, guys.
There's actually the same thing happening in Greece for the last 2 or 3 weeks, which is organized by my wife's first cousin. They have 400 3D printers now, and 500 people who are doing this and sending stuff to all the hospitals here. And I think they're going to be sending stuff abroad as well. But anyway, okay, enough of that. Let's have a look at the numbers. So little detail, Joe and some of our friends on the chat room correctly said that these payrolls, this is numbers collated.
Yeah, it's a non-event. It's a
until
non-event.
the 12th of March. It's not exactly a non-event, but it's not going to
more or less tell you it is, because no matter what the number is, everybody knows that the US has lost 10 million jobs within the last 15 days, actually. And those 15 days are not included in this payroll data.
Yeah. Maybe it's an opportunity to sell into strength if this comes, or when it comes stronger than expected.
I don't think there's anybody going to be fooled that even if the number is, even better than expected, which, the number that is expected might be a negative 100,000, but in comparison to, what should be coming, it's positive in essence, right? So even if it comes zero, I think that nobody's going to really buy the market because, of that number, which is completely obsolete at the moment.
Okay, let's see. 2 seconds.
more. Okay,
Minus
now
700.
that number,
Okay.
that number can actually move things because, yeah. Now that number that
Yeah.
is actually much worse than expected in data that, that are obsolete might actually move the market, but in the opposite
Yes.
direction.
Yes. Wow. Okay.
I really don't want to see next month's number.
Yes, that's going to be the big one, isn't it?
Yeah,
Average
next month's
hourly
number,
earnings.
I
Yeah.
believe will smash any negative record by multiple times.
Yeah. Average hourly earnings slightly higher, but who cares? Unemployment rate went up to 4.4%, but really this is going to go double digits. And
I think unemployment, yeah, is going to be double digits in, I don't know, a couple of months. Worst case scenario, best case scenario, to be honest, because that
it's gonna be sooner than that. You see, Norway's print came in at 10%,
yeah.
up from 2.3 it used to be, came in at 10.5. So it's pretty much instant. You know, after 2 or 3 weeks of such unemployment claims, you're going to get the number going higher. What else did we have? We had PMIs coming in today. Now these are March PMIs, so out of Europe. So these are now reflecting the situation. And you had numbers like Italy, services PMI, 17.4. Right?
Yeah.
I think it's
With
an all-time
50,
low.
Yeah, with 50 being the midpoint.
Yeah, and France 27, I think. Germany 31. Actually, Germany doing, and UK 34.5, which is probably a success in these circumstances.
Yeah.
So numbers are now starting to show. I think next month's numbers are going to be, if not the peak, close to the peak of bad numbers. Maybe not actually. It might continue for a while, but definitely not looking good at the moment. Now, the other interesting thing yesterday was oil, and we had
Dale said it. We had been saying it for some days that being short oil was, a very bad proposition because, as I've kept saying about the metals as well, that you might wake up one day and, one headline might have moved the market like by, 20, 30, 40%. And that's what happened yesterday. And we have another 10% today. And, if oil confirms that it's moving higher, which, it's not 100% sure yet, people might not realize that, but you might see 10% moves higher for many, many consecutive days.
Yeah, because that will still take you to like, $30, $35. It's
yes.
not going to take you. Yeah.
Yes.
So
exactly.
Yeah. And well done on, you called it, right? You said 28, didn't you? So that was
this is a critical area. We need to see what happens from here, but we've definitely had a reversal. A momentum loss was already more than apparent. So if now we get like a couple of more triggers, this thing can explode higher, really. And in my opinion, that's not the only commodity that can actually explode higher. That's one of the many.
Yeah. Yes. So yesterday we had, Donald Trump, who just goes out and says, "Oh yeah, I'm expecting a 10 million barrel cut." I mean, if anybody else said that, they would probably be facing charges, right? Anyway, the OPEC have now announced that there is going to be an emergency meeting. I think, is it on Monday? I think, and initially the whisper was like 10 million barrel cuts. Now they're talking about 6. Nobody knows if there's going to be a cut or how much it's going to be, but the fact that they're going to start talking about it is definitely going to be positive on oil. And we talked about this here yesterday, right, on this webinar before it all started. And we did say, all it takes is one headline for this to scream higher, and you really don't want to be short. So obviously the problem is how do you get long because of contango. So I personally was long Shell. I actually sold.
Yeah, you said that as well, and it's very correct, because not only you don't have rollovers, killing you, but you actually have in some cases a dividend as well paying you.
Yes,
so
absolutely. And that's it. I don't think we have much going on today. We have some PMIs out of the US, actually probably worth keeping an eye on, but really we're going to be done for the week, and it's been a long week. So I can't wait to
On
get,
other macro news before we go to the charts, I don't know if you saw. Yeah, you did see it because I wrote it anyhow on Skype. For those that haven't seen, the Fed's balance sheet is at 6 trillion now. So as I wrote earlier on Skype, one of the worst predictions that I've made on this show probably was that the Fed's balance sheet would double during the next recession, and I've kept saying that for a year or so. As it seems, I was very, very off the number because it has managed to move from 3.7 trillion, where we found the low after the short period of quantitative easing, to 6 trillion
quantitative
within a few.
tightening, you mean?
Yeah, sorry,
Yeah.
quantitative tightening, yeah. So it dropped from 4.5 trillion to 3.7 trillion. After a few months, we are at 6, but that's not the issue. It's that, from the move to 3.7 to 6, the vast majority of that move has actually come during the past 3 weeks.
Wow.
Yeah.
Wow, absolutely.
So I think that my assumption that the balance sheet would double was, a huge underestimation, because with this pace, I think that probably now assuming that it's going to triple might also prove to be a moderate assumption, a conservative assumption.
Yeah.
So, do what you want with it. But if you think that, you can throw in the market likely something close to 10 trillion within whatever 1 year, how much is going to take, won't have consequences, and won't have huge spillover effects to the economy, I have a bridge to sell you. So you've been warned in advance. I'm warning once again now, and as I've said, I'm very afraid that first of all, that's not something to be afraid of. I mean, this is a realistic thing to say. Don't believe that once the COVID issue starts receding, that means that the economy can, simply flip a switch and go back to what it was, let's say, in January 2020. Okay. I mean, first of all, the economy was more or less a bubble, and the bubble has now been pricked. Unfortunately, the pin had to be something, as bad as, a pandemic, with whatever that means and all the implications for human lives. But the thing is, if we focus purely to the economy, can that bubble be reinflated no matter how many trillions they throw, like instantly? I mean, unemployment, for example, in the US might have moved to 15% from 3.5%. Can all these people get employed immediately back to the same companies? Will demand be restored immediately? No, because the spillover effect to the damage that will have already happened is going to take a lot of time to remedy, a lot of time. For example, how can demand go back to normal when you now have a lot of people that will be playing defensively? I mean, if you've lost your job, or if your income has, decreased substantially, the last thing you're going to do is go out there and start spending money on, for example, leisure, or buying stuff other than what is necessary to go through the month, etc. So that's the issue with an economy. An economy is a cycle, right? And once you create a big disruption, even at one part of the chain, the cycle breaks down. So if you are an optimistic person and you really believe that this thing can go back to normal, assuming the best case scenario, I mean, we find, let's say, a cure. We're not going to find a cure, actually. I've talked to some doctor friends of mine. I mean, we're not going to find a cure for the virus, but we might actually find medicine that will make all the symptoms that can lead to death, in essence, not being an issue. Or of course, we can find a vaccine. So even if we assume the best case scenario, and all those happen within zero time, let's say a month or 2 months or whatever, still the damage to the economy has been done. So keep that in mind. I mean, it's not going to be a fast recovery no matter what the Fed does. I actually think they will do more harm than good at the end of the day. So, we have to continue trading, having, that macro backdrop.
Yeah, we can't control the economy or damage to the economy. What we can control is not damaging our trading accounts.
Yes.
Okay, that's the only thing that we could control. And I'm thinking about it, Steve, and there's probably some people that have drawdowns, and I just want to give them a little encouragement. It ain't nothing but a drawdown, not a margin call. It ain't nothing but a drawdown, not a margin call. So if you like to trade, hang in there, because it'll be all right.
Nice.
Elvis has joined the building.
So don't worry.
Nice.
It's only money. So
it's only money, yes.
Yeah. Anyway, see, I have drawdowns right now. So on some stuff, I mean,
yeah. Summit says QE1 30, QE2 30, QE3 40 to 85. Those are billion. QE4 40, yeah. QE now 2,700. Yeah, listen. That is exactly, we talked about it yesterday as well, and during the past more than a year, I've said it multiple times. It was more than certain that the next QE would be multiple times all the previous QEs combined. Why is that? For the same reason, a drug addict needs more and more drugs to just be fine, okay? I mean, when you're artificially trying to support, a broken building, you need to put a lot of effort there. So yeah, they're going to keep throwing more and more at it, and the law of diminishing returns is always going to be there. And since a lot of people have recently found out what exponential means, the law of diminishing returns is exponential in this case. So what QE1 managed to do with 30 billions per month, QE4 might not manage to do even with, 500 billions per month on average. And that tells you all you need to know. And at some point, what is the amount that breaks the camel's back? And if you believe there is no such an amount, if you believe that there is absolutely no limit to how much money you can print out of thin air, then we're doing everything wrong. Then we've done a huge mistake during the past several decades because we hadn't realized that we can have actually a Star Trek economy. I don't know if any of you was watching Star Trek, that there is never a mention of money or whatever. I mean, you want any type of product, you go to a replicator and the product just appears there. So there is no real need for money, no real need for.
So is that what our Great Reset is going to look like? Star Trek?
No, I think that's what we think we have managed to invent now.
I was hoping.
The ability to create things out of thin air without any negative repercussions.
I thought I was going to be able to meet Lieutenant Uhura. Anyway,
something tells me that she's too old for your taste.
All right, well, anyway, so then is the Great Reset going to be Mad Max?
I don't want to be pessimistic. I mean, being realistic about where the economy is headed is one thing, but you always hope and wish that they're going to be forced to do the right thing, even with a big delay.
It's going to be Orwellian on steroids.
I don't want to go into that because I don't, I want to make a realistic assessment of where the economy is going. And for those people that have been listening in, I'm afraid that so far I've been proved right in most counts.
Yeah, I wish you'd shut up about it already. You've been too right about it. You're right. It's not going to be Orwellian. It's going to be, I don't know. It's going to be like the 1950s again. That's what everyone wants in America.
Stronger oil, good or bad for the economy? Go figure. Stronger oil is always bad for any economy.
Yeah.
I mean, one of the huge myths that central banks have built to persuade people that all the bad stuff they're doing are actually good. And they've talked about that some time ago, and I would actually need to go in a special webinar and talk about it specifically, is the stupid myth that deflation is something negative. There is nothing wrong with deflationary pressures and deflation. Actually, deflation is
because there's buying power for
exactly is a healthy rebalancing of an economy to make bad times being less bad. So imagine, I mean, until the recent past, at least when you had a crisis, when you had a financial crisis, when you had an economic crisis, when you had a big recession, at least the auto balancing of the economy created through very decreased demand created prices moving lower, so deflationary pressures in essence. But that is a good thing, because during a recession, people lose a lot of income, people go unemployed, people have a lot of issues that they need to handle that they didn't have in the past, and at least deflationary pressures are assisting with that, because your purchasing power goes up. You might be losing income, but at least the income you maintain has an increased purchasing power. Now, what central banks want to do is make sure that even during periods of recession, instead of having some deflation, so some increase through that of your purchasing power, which might be decreased, now they want to make sure that even during the worst type of crisis, you also have inflation to fight with. So the combination is, in my opinion, absolutely lethal. Deflation is nothing to be afraid of. It's actually really good. As I've talked about in the past, during the best 100 years of the US economy, more than half of them, there was deflation, and there was absolutely no harm to the economy, actually quite the opposite. So there is absolutely no evidence except theoretic BS from neo-Keynesian people that just want to, persuade that following the wrong type of monetary policy and economic policies is the right thing to do. And as I said, unfortunately, everybody's going to realize that sooner rather than later. But I'm afraid, that the damage will have already been done. So higher crude oil prices is always a bad thing for an economy, with one exception. If your economy makes, a big chunk of its income, a big part of its GDP exporting oil, then higher oil prices is a good thing for you. But since, from the 200 something countries on the globe, only a handful of those make most of their income in exporting oil, increased oil prices is a bad thing for almost, not all, but almost all countries on the planet. I would say something like 95% of the countries on the planet get hurt, and their citizens, get hurt when crude oil prices increase. So at least, for example, low oil prices would definitely be helping with a weaker economy. But I think they're going to manage to even have quite high oil prices during an economic recession. Let's hope it's not going to be an economic depression. In your view, why did this change? In the past, the business cycle was not toyed with. Yeah, that's exactly, you said it yourself. I mean, I don't have anything to do to add there. I mean, they keep toying with the economic cycle, and the more they toy with the economic cycle, the more they distort it, and the more they distort it, the worse each crisis is going to be. Because they keep injecting more and more moral hazard in the system, and they keep making the economy and the companies that participate in the economy more and more brittle. So instead of trying to fix the mistakes they've done in the past, they keep repeating them at a bigger extent, until the system completely breaks down. That's it.
Maybe it's
As
the
simple
only
as that.
way that the U.S. and the world could have continued to have tax revenue. They couldn't afford to go through a recession because of the tremendous deficits, and there would be fewer tax receipts that would make it blow up. So this delayed it, and as long as people thought they had a functioning economy and went to work, they were able to keep the Ponzi scheme going. There's this funny thing about confidence, Steve. I've heard this. Confidence is fragile once the con is revealed.
That is very true.
So people are seeing the con now. So anyway, could that have been a reason? I mean, it was, potential default if we had let things go for not just banks, but sovereign paper, if we had just let everything go.
The thing is that, the problem, as I've said again and again, is political cycle. Each one that comes to power just wants to make sure that the system doesn't blow up in his hands for the next 4 years. And that is
true.
That is a very, very, very big problem.
No one wants to be known as Hoover.
Exactly. And for those that don't know who Hoover is the guy under which, the US economy blew in the 30s, and we had the Big Depression. One of the huge mistakes, by the way, that Hoover did, Dale, was that he negotiated with all the industrial lobbies, etc., so they actually don't cut salaries to people.
Huh. Look,
Yeah.
kind of like what's going on now.
Yes, and guess
with the
what?
Checks.
That actually created what we now know as the Depression, because instead of going into a deep, short-lived recession, by not letting the economy rebalance and the companies do what they have to do to preserve their future, and hence the future.
Lay off people.
Exactly, which unfortunately, I mean, this is not, first of all, economics is a social science, and there is a reason for that. First of all, because it's based on human behavior. Second of all, a lot of people don't understand it because they try to look at it superficially. If you follow sound economics, you might make some decisions that initially look like harsh, but they are the most humane decisions you can make. Because, for example, as Hoover did, Hoover had all the good intentions of thinking that if he persuades companies and company owners not to lay off people to go through the recession, he's actually doing good to the average civilian. Little did he know, because what that did is create companies that were absolutely unable to go through the recession. They remained zombie companies, and instead of going through a 6-month, 12-month, 18-month recession and then fast recovering for another healthy business cycle with its expansion and everything else, that got prolonged and lasted almost 10 years. Imagine how many jobs and how much human suffering happened because of good intentions, as always. I mean, the initial intentions were good, but the outcome was much worse for almost everybody. So once again, we're seeing the same mistakes that have, been repeated in the past.
There have been some comparisons between President Trump and Hoover. Just the business-friendly type of thing. People have drawn parallels between them based on policies and philosophies. So who knows?
Yeah, who knows? Because I mean, none of us was alive back then to to have seen policies. Yeah. I mean, it's one thing reading about them and knowing some basic pylons of the politics back then.
Well, that would mean the next president's going to be left-wing Roosevelt type. After Hoover was Roosevelt, right?
Yes, that is very true.
Eh,
Now, now the thing is the following. Do you think it's unlikely? I mean, don't you see a parallel there as well?
Yeah, I do.
Exactly.
Yeah.
Exactly. And in my opinion, the only chance Trump still has, a chance of getting reelected. Now, I don't think it's that big, but he has a chance. Is because, let's be honest, I mean, Biden is, is.
Go ahead. What is it?
It's not, a presidential
Not in
candidate.
it.
I mean,
Not in. Not at
he
his
seems
peak performing state.
he seems to be more or less senile.
Yeah, that's
And
what. Yeah.
and it's really sad. I mean, a whole party couldn't find, a more suitable candidate. I mean, people, they had to go choosing between social, outright socialists, or a guy that is obviously way past his peak. I mean,
They said when they were both running against each other, well, they still are, that it was kind of like those guys in the balcony on the Muppets. Those two older guys. And
oh yeah, yeah. The Muppet Show. Yeah, I remember.
oh
it.
wow, there goes gold. See, it was nothing but a drawdown, not a margin call.
Let's see.
And silver.
Let's go. Speaking of gold, by the way, if you notice, gold is still finding resistance in this descending channel. But
and it's 1620 was 78.6 back from that. I'm stubborn. I still can't get long up here, so I still think that there's a shakeout coming. And you know why, Steve? When people pay, willing to pay $4 or $5 over spot for silver, it kind of like Grega brought it up. It's kind of a sentiment thing. It's not like you have to convince people to be bullish metals if they're going to pay, 30% premiums to own it. So we'll see. I'm not saying they're going to go to a discount to sell cash, but I do think that premiums will come in if we have one more bear leg like Grega and you've talked about. Where do you think silver will be if gold goes to 1330?
Likely single digits, high single digits.
Okay, like in the
not necessarily
range.
because not necessarily because there is, as we saw with crude oil, there is some lower limit which is very, very hard penetrating through.
Yeah.
Because of basic supply demand and extraction costs, transportation costs, etc. So I think that even if silver makes it to single digits, as I was saying, if you remember for some time for crude, that if crude makes it to teens, which it made it to 19 actually, it's going to be very short-lived. So I believe the same thing with silver. Is it likely that it might even go to single digits? Yeah, it can happen, but is it anything more than short-lived? No, I don't think so. I think it's going to be very short-lived, and I'm going to be more than happy to see silver at single digits because I'm going to be buying,
I think Grega had a long-term Elliott target shade under 9, like 860-ish, something like that.
Bring it on.
Yeah.
Okay. I hope he's right. I very much hope he's right. I doubt it, but would be the best gift if you ask me. Yeah. Because let me say it oppositely, and let history prove me wrong. I'm going to be buying silver at 9 like it's nobody's business, and I will be able to sleep at night no matter what happens. You know what I mean?
Yeah.
I mean, having bought silver at $9, in my mind, I will have, I'm not saying this is the right approach. I'm telling you how I'm going to feel, that there is zero possibility of not ending up making profit from that. You know what I mean?
Mm-hmm.
I don't know if it's going to take a month, 6 months, or a year, but if I've bought silver at $9, I'll know that this is going to be something that's going to, yield a lot of profits in the end.
I remember selling it at $5. For a long time, that was the floor, $4 or $5. You know, I was
Yeah, but on the other hand,
deals too.
on the other hand, you can also testify on this webinar that you remember the time when somebody could buy a house by spending a few $100,000. Am I wrong?
Yeah,
and I'm talking
especially
about
in
a
California.
big, yeah, I'm talking about a big, nice house. I'm not talking like,
Oh,
you know,
never in my lifetime in California could you buy a big house. And, you know, I'm not a young guy.
yeah,
So,
not necessarily in California, but I mean,
yeah.
you know.
Well, not on the beach.
Yeah, okay, yes.
Yeah.
But, yeah.
Maybe in the desert, yeah. Anyway. Well, we'll see. Anyway, do the right thing today and tomorrow takes care of itself.
More or less.
Friends.
So silver and gold, in my opinion, still can be in corrective formations. I mean, we clearly see it here in gold. We clearly see it here in silver. I mean, in my opinion, Dale, even the bearish case scenario is probably a little bit more complex. So let's assume that silver is going lower. Just from a technical structure, it would look more likely to me to get something like that.
Yeah. Okay.
Okay.
Unless this is a descending triangle right here and takes out support, and that still wouldn't be a new low. So go back to it, and what would be your, say we take out it's in what kind of range in that blue kind of triangle, rectangle?
This one.
Okay,
yeah.
So what would be the measured move underneath it if it broke down? That's where you could buy it.
1460, $1 lower, actually, more or less.
That's it. And look, that's right at the breakout of your other symmetrical triangle.
Back there.
That'd be a nice entry for a trade.
Yeah. I mean, yeah, sure, it can. Although if we break below that, then this is going to be a very likely scenario. Let me show you. Let me take off the magnet. So this is going to be then a likely scenario. Buying it down there will make sense, but then I wouldn't be surprised if a retest of that area,
then it down again,
rejects.
Yeah, okay. So that's real key then for it, like intermediate term, that lower blue line. Okay.
Yeah, exactly. So
thank you.
We don't have an interview, I assume, today, so I can go through all the questions. Okay, great. So
or
there's a friend here asking.
I could play a few songs.
So
I bet people would rather hear that. Huh?
At the end, we'll combine.
All right, man, go ahead.
So there's a friend here asking if euro dollar can go to parity. Short answer, yes, it can go to parity. But if you're asking me what my gut is telling me is that it's not going to be easy at all. So I do think that there is likely more upside for the dollar, as I've said again and again, in the short term only. Now, will that be enough to take Euro USD from 108 to 1? My gut feeling tells me that likely not, actually. So if I now had to make a binary bet, will we see parity or not? I think I'd go with not. But even if we do, so, let's say we did, I think it would be short-lived. As I said that, I think that if we see, for example, silver at $9 is going to be very short-lived, that kind of thing. So, yeah, that's what I think about it. Gold upside, head and shoulder, if it will be one more time in 1700. As I just showed, and I'm still staying on 4-hour charts, by the way, if you've noticed. As I showed, here is gold. I think that it is very likely that this is some type of a corrective move, especially if we close above like 1620. I think we're going to be attacking 1700 again. So yeah, my main case scenario is actually that. Now, again,
Richard is saying they can't buy gold in Europe, paper gold. Is that true?
No.
In Europe, they stopped long XAU trades.
No.
Okay, it's your broker, Richard. It's not Europe.
Yeah. No, that's not the case in my broker.
Some brokers aren't making a market in it because they're afraid.
And actually, you know something, Richard, just to verify that to you, because let's say there is a small chance that I haven't just realized, I'm currently opening up my broker's platform on my mobile phone. Give me a second. And I'll actually try to buy a very small quantity. Yeah, I just opened the position, no problem whatsoever. So yeah, I mean, I just confirmed that that's the case. I can buy gold if I want to.
Okay, Richard, you need to get a hold of Trent and Justin at Forest Park so they could set you up with a real broker that isn't closing CFD trading to you. Okay, buddy?
Yeah, and actually, I can also tell you, because I just bought it, the spread was absolutely fine. I mean, the spread currently was at my broker a little bit less than $2 at 1600 that we are, right? So the bid offer was, quite tight, I have to say.
Thanks for checking that out, man.
No problem, no problem. I just bought 1 ounce, just, to see if if it works. I mean, I didn't actually buy a position because I was just saying that, we're currently at resistance. So, buying here, doesn't make much sense. I mean, if you want to be short here for a short-term trade, I would understand why. But I do think that it is more likely that we're going to break higher and continue higher from there.
Okay.
So in global crisis, aka 2008 crash, investors tend to flee to the dollar. Investors seem to feel a little more comfortable pulling out. But this coronavirus, all it takes is one sick person who got it late to start over this entire pandemic and fear. Then the media will run with it. Listen, coronavirus is not like a super lethal virus. But the combination of how contagious it is with the fact that its mortality rate is rather very high at specific segments of the population. And, like it or not, among us, there are several people that have pre-existing conditions. There are, several people, I mean, many of us have parents that might be old, or grandparents, the younger ones that might be old. So, it's still an issue. It's still a big issue. And, the big problem with coronavirus is the fact that if you don't flatten the curve and you just overwhelm the global health system, you will end up losing people that you could have easily saved. So I don't think that the response is that exaggerated. If you're asking me, I think that the response could have been a lot more targeted, and that's the argument I have when I'm talking to a lot of my doctor friends, meaning I think there's going to be a big loss of life because of the economic consequences of shutting down the economies. So I think that a combination of being that strict with specific segments of the population, so for example, restricting elderly people or people with pre-existing conditions, of course, giving them the ability to have paid leave if they, it's proven that they have pre-existing conditions, and let younger people that are active and have a very, very low chance of having big consequences to their health if they catch the coronavirus, continue to work, etc., I think might have been harder to pull.
I just sent you an email for requesting paid leave.
Okay.
Let me know what you guys think.
Last time I checked, you work from home.
Yeah, but I might want to leave. I might want to leave, man. I just want some paid if I leave.
That's an interesting question from Dillian. Could you check the gold oil ratio? Historically, it has moved between 10 and 30, but recently it spiked up a lot with expectations of gold moving even higher. Then oil is really underpriced here. Without even checking it, what you're saying, Dillian, sounds reasonable to me.
Yeah, I think it's at record levels. It hasn't been here in a long time.
There you go.
Oh, I guess it has. Wow,
And
look
you
at
know
that three
something?
drive.
You call it a 3 drive. I call it an amazing ascending wedge.
Yeah. 3 drives are quite often
Usually ascending
inside.
wedges.
Yeah. Wow.
Look at this.
Nice.
Actually,
That's because of the crude pop breakdown.
good eye, Dillian. And this is the 4-hour chart, by the way. So, don't think that this happened days ago. In essence, probably we broke down here yesterday. Yeah. So yesterday's move was the breakdown in the gold crude oil ratio. Actually, that's a very good eye, Dillian. Yeah. Let's have a look at it on the daily. Actually, let's have a look at it directly on the weekly.
It's amazing how many great traders we have in here.
Yeah, Dillian is a great trader. I mean,
yeah.
And look at this weekly reversal in the ratio. Huh?
Wow.
Look at this. Key reversal on the weekly chart. That's actually quite nice. Yeah. I mean, if you want my fundamental thesis, the fact that perhaps this ratio would remain in an ascending channel would make sense, because globally we are definitely forced to eventually move away from oil. So I do believe that the tendency of this ratio would be to keep on increasing, as we move forward. But, that's one thing. And it's another thing seeing a move to 84 that we did. So I'm with you, Julian. This looks like a nice spread trade, although you have to keep in mind that this nice momentum should continue, which seems to me from a technical perspective likely to continue, because you're going to be paying to play that spread. Okay, I'm just saying that to make it perfectly clear. Thank you very much. Actually, that's one of the most interesting questions we've had. Ingmar says, thanks, Blake. All the best for you and your family. Compliments to Steve for his 28 crude warning. Thank you, Ingmar. Have a wonderful weekend. Hi, guys. Could you please have a look and evaluate USD Swiss? Yeah, absolutely. So USD Swiss, we said the other day that this looks likely to produce another leg higher towards parity. And, this seems to be the case. So I think we might move towards parity. Now, what happens from there is a totally different question, because I would think it's very likely that parity is going to reject once again. But for the time being, this looks to me like a B, and we might have one more leg higher, and parity looks, like a beautiful target. Numbers is very bad, but USD is going up. Why? First of all, it makes sense for US dollar to get beat with bad numbers, because we've explained that we are in the period of time that bad news should be dollar positive. Second of all, I wouldn't be paying that much attention to today's NFP number, because the market anyhow believed that and knows that employment numbers are going to get horrific. So at some big extent, that has already been priced in. Okay. Is bad news good again? Says Dillian. Dillian, you know something? That's a second good question for the same webinar for me to answer and say, I believe that bad news sooner rather than later are not going to prove to be good news, because soon enough the market is going to realize that the Federal Reserve is already all in, and once you are all in, perhaps they will realize that bad news is bad news, right? Because when you're all in, what else are you going to do to fix bad news, right? So I'm not doubting that for a period of time, bad news might resonate as good news from the market. And for those that don't know, that means, expecting that bad news is going to be followed by a bigger response that is going to be positive for the financial markets. But I think that sooner or later the market is going to realize what I just explained before, in which case I expect that during this period that begins now, whatever cycle this ends up being, in general, we're going to go to the point that bad news might be bad news and good news might be good news. With growth, Ben says, with growth non-existent and commodities perking up, the pieces are falling in place for stagflation like in the 70s. My man, I mean, yeah, welcome to my camp, right? Yep. I mean, if you remember, since a couple of years ago, I started warning that be careful because generals are usually prepared to fight a previous war, and the next war might not be the same as 2008. What if we have stagflation again? And yep, that's what I think. I said that, in my opinion, the chances of the next crisis being stagflationary crisis are a lot higher than the market expects. The market more or less expected that to be a 0% possibility. I expected that to be something like a 30% possibility. But seeing the response, that it is a lot more aggressive than what I initially expected, I have to take the chances above 50% now that the next crisis is going to be stagflationary. A lot of the jobs where people are unemployed are service industry, stores, restaurants, and a lot of these companies lay off their employees intentionally so they can get employment and will rehire them immediately once things reopen. Matthew, I have a bridge to sell you. Fly to Greece. I'm going to show it to you. Okay. Let me say the following. I hope you're right. I think the chances of you being right are very, very, very low. I'm not saying there is not going to be a rebound in employment, a decent rebound in employment once the COVID situation is under control. But if you think that this rebound is going to be from, let's say that we reached 15% unemployment. So if you think that this rebound is going to be the economy going from 15% unemployment, if we assume that that's going to be the peak, back to 3.5% unemployment within a few months, no chance in a million. And let me make it more specific. If you think the rebound is going to be from 15% unemployment to 5% unemployment, I'm going to repeat, no chance in a million. Okay. That's my personal viewpoint. So, you want to trust my judgment on the economy, one thing. You don't, it's another thing. I always advocate anyhow that everybody should, take opinions lightly, and, you judge, what you want to keep and what you want to throw away. Steve, Euro rally over, time for parity. Oh, another question for that. Time for lower prices in Euro USD, likely. Will we reach parity? I doubt it. We might not, but even if we do, I don't think it's going to last long. But anyhow, yeah, I'm still bullish dollar in the short term. And I can't keep stressing that enough, right? My long-term thesis is very, very bearish the dollar. And once the real numbers start coming out, and you see that the deficit will have exploded to something close to 15%, counting the off-budget items, and once, creditors realize that they are never, ever taking back their money they have in US treasuries, they're either not taking back their money, they're either not getting paid back their money, or they're getting paid back their money worth a lot less. I think, the beginning of the end is going to be there for the dollar. By end, don't exaggerate it. I mean, the beginning of another very big bear leg lower for the dollar will have been witnessed. Hi guys, could you please evaluate USD Swiss? Already done. One more thing. Keep in mind that despite the efforts of the S&B, the Euro Swiss still remains in a downtrend, right? You can see it here. Now, don't expect the Euro Swiss to crater lower, because we know, I mean, they admit in supporting the Euro Swiss ratio, okay? So we know that it is very, very unlikely for it to crater. But you know, as long as the situation is what it is, a slow depreciation, you know, a drop by drop depreciation might resume for the foreseeable future. And I'm saying that, you know, for the obvious implications it has in the USD Swiss rate. Okay. In 1994, I bought a nice big detached 3-bed house in West Palm Beach with a club facilities, pool, tennis courts, etc. for 168,000, says Richard. Richard, if you don't mind me asking, how much is it worth today? Because it's all due to inflation, right? That's why I'm asking. I mean, to show what I was telling before, that, you know, Dale said, I remember the time when $4 to $5 was a nice floor for silver. And my point was, don't expect that time to come ever again, because back then, $4 to $5 was worth a lot more in today's prices, right? So the same thing definitely applies to your house purchase back in 1994.
Is Richard a realtor?
No idea.
Okay.
Gold upside hadn't sold, but now I have tried it and it works, says Karad. Yeah, so you see it works. Perhaps it was a small period that there was an outage. He's talking about buying gold.
Oh, okay.
Maybe the possibility to buy, to later have it delivered as physical. Yeah, I mean, yeah, you can do that. And actually a lot more people are doing that nowadays, keep in mind. And that's why there's a big stress in the system. Axie Trader from Australia, Easy Forex from Cyprus, Greece, FXCM outside USA. We'll go to Forex Park, thank you. 3-bed, 2-bath with small backyard and the green net barbecue balcony in Lake Worth, says Richard. Why is the SPX going up after the awful numbers? Because the awful numbers were already priced in. Because we've already seen much worse numbers than that in the weekly reports we got this week and the week prior to that. So that is why, because the S&P doesn't care about it because it has already priced in. Now, do I think that this rebound is going to be prolonged? No, I don't. I still think that the S&P might have another down leg towards 1800 to 2000. I'm based in Holland, says Richard, and the UK. The fear with the coronavirus is not rational. It's being hyped 10 times. Its actual impact it should have. Matthew, I explained what the situation here. I agree that, you know, for a huge segment of the population, the coronavirus is really not a big issue at all. But unfortunately, first of all, it can be very dangerous to a decent percentage of the population, let's say 10, 15, 20% of the population. And unfortunately, there is no healthcare system that can accommodate that number of people concurrently suffering from it. And that's the big problem. That's why it's so overhyped, because the doctors know that no healthcare system can handle so many cases at the same time. So although on a personal basis, I agree with you, it's like a really bad flu. For a small segment of the population, it can prove to be a lot more than that. And that's a big enough segment for the health system not to be able to handle it, you know, if they all got it more or less at the same time. That's the big problem here. I will find a broker via Forest Park who is most competitive to purchase paper gold because I'm a big gold fan and have been for many years, says Richard. Yeah, Richard, I'm a client of Forest Park FX. I can tell you that I haven't seen better professionals in this sector than Trent and Justin. They're the two top guys in Forest Park FX. We've been working with them for a couple of years now, and you know, I have nothing but good words to say about them. It's not frequently that, you know, you find people in this sector being, you know, that good in what they do, and you know, that straightforward with their clients and that honest. And I couldn't recommend them, you know, more than I just do, and I wouldn't say easily that if I didn't mean it, really. Actually, I would never say it if I didn't mean it. Hi guys, could you please evaluate? Okay, another question about USD Swiss. We covered that. Will you go on holiday to Mexico? Do you think EG is forming a bullish wedge? By EG, I'm assuming that you mean euro pound. So
yeah, that's what Blake showed, a falling
yeah,
wedge.
listen, first of all, this is a nice confluence of supports, right? Look at this. It's a triple confluence of supports. 61.8 from this move higher, 200 daily moving average. I don't know if you can see it. Let me zoom in so you can see it. Here it is, the blue one. So 200 DMA, 61.8, horizontal support resistance area. So let me be very, very clear. I mean, this is, you know, from a technical perspective, if you are to buy it somewhere, this is where you buy it. Okay. Now, does this mean that it's going to 100% work? No, because nothing is meant to work 100% of the times. But from a risk-reward perspective, having already seen a move lower from 95 cents down to 87.5 cents and currently finding support at such a nice area of supports, I think especially if we break above this descending channel, you can see it here, I think it's going to be quite a nice signal to be long. So for example, it depends on your risk profile and your risk preference, how you want to trade it. People that are a little bit more aggressive might have been buying, as Blake did, some of it when we tested this area of support. Some other people might just wait for the breakout from this channel if it happens. Some other people might do a combination of the two, so buy a little bit, you know, at that confluence of supports, have already bought a little bit at that confluence of support, then wait for an initial reaction to give them more evidence, buy a little bit more, then wait for the breakout from this channel, add more to your position, and then having built a full position in essence with, you know, a very appealing cost average. So it depends, you know, totally depends on how you want to, you know, approach this. It totally depends on, you know, how you want to take it. Trading on the basis of released NFPs is for amateurs. The pros already have taken most likely NFPs numbers into account. I agree with what Richard says. That's what usually happens. This home has a beautiful new kitchen, blah, blah, blah. Okay, and you see.
Nice.
Really?
36,000.
Interesting.
Yeah, wow.
Wow, indeed. All QE worth 4 times that, but with what's coming, God knows. Sold it in 2019. I'm not a realtor, only a real estate investor. Okay, good for you. How would EuroCAD move over the weekend? Okay, now EuroCAD, there was somebody, might have been you, asking yesterday about EuroCAD. And if you remember, I said that, you know, the best bearish case scenario for EuroCAD here would be, why doesn't it like EuroCAD?
I'm having trouble with my trading view too. Nothing's coming up.
That is quite weird.
Seen? Yeah.
Let me refresh. Let me refresh and try again.
There.
So EuroCAD. Here it is. Oh yeah, now it works. Okay. So there it is, actually. If you remember, I said yesterday that, you know, be a little bit careful. You should wait for a break from this either diamond formation or a triangle, you know, depends on which direction it breaks. I said that I would like the downside only if it breaks through the diamond formation, and look at it. It actually, yesterday after the webinar, did break below this diamond formation, and it seems to be doing quite nicely. So I have to say that this looks like a nice reversal to me here. Keep in mind that as long as this crude oil's rebound is ongoing, there is a good chance that EuroCAD is going to be a nice short. So yeah, I mean, it looks nice to me. And I think it might move lower, and especially if during the weekend you get more rumors of some type of a deal having to do with crude oil now, I mean, you might even see a gap lower, okay, which would be even more beautiful, because then we would have this diamond reversal having been created after a gap higher, and then gapping lower from it would be actually technically beautiful. What do you think about USD CAD with these oil news? I'm long. Listen, so far, the uptrend has not been invalidated in any way. So I still potentially see here a bull flag. Now, keep in mind though, that corrections can prove to be more complex. So there's no guarantee we're going to break out. We might just, do something like this. Produce another leg lower and then higher. Okay, so I'll keep monitoring this trend line resistance, for example, and judge from there. That's what I think. But so far, the bullish case scenario is absolutely on the table, just to make it clear.
Well, have a nice weekend, buddy. 6:30.
Natural gas. Okay, let me cover natural gas, Aussie and Kiwi, and we call it a day. So natural gas, there it is. Natural gas, if you remember, I kept saying that it held up much better again. Okay, here it is. Much better than crude oil because, the downside momentum had actually waned since some time ago. I still think that from a long-term perspective, natural gas looks quite nice for the upside. But if you actually want a technical signal, this is it. This descending channel, a breakout from this channel, I think is going to be a nice signal to be long. Okay. And Aussie and Kiwi so far are failing from what seemed like corrective formations. You can see it here in the Aussie, and you can see it here in the Kiwi whenever it decides to load, because as it seems, they have some issues here with TradingView, probably servers overwhelmed, or perhaps some of the servers are down, or who knows what. But regardless, take my word for it, Kiwi has a very similar formation. So I have to say that you should be careful with Aussie and Kiwi because they're likely to be rolling over and moving lower, especially if we see risk sour. That should accelerate the downside in Aussie and Kiwi. So everybody, have a lovely weekend. Thank you for being here. If you want to be with us for 2 more webinars, the European crossover webinar and the daily roundup, you know what to do. If you haven't tried ForexAnalytix, it's just $1 for getting a taste of our premium subscription for 10 days. I think it's quite a good proposition. And Dale.
Yes, sir. So everyone,
do what you do best.
Okay, it's our hope that you and your families and loved ones remain untouched. Don't just count your pips, count your blessings, and have a great weekend. Today's a great day to try us so that you could familiarize yourself over the weekend and have some good ideas to execute. So we'll see you, and thanks for all your support and being part of, in my extremely accurate and humble opinion, the best team on the net. Okay, everyone. Adios. Have a good weekend, Steve.
You too.
Okay,
Good to
buddy.
everybody.